Steve Leisman joins us now with a look at how much the current outbreak will bring down growth this quarter and how much a vaccine could bring it back. How'd you do this?
Well, Joe, let's take a step back and, at least in my reporting career, never has the market's optimism about the future had to look through a grimmer present. A vaccine and a return to normal sometime next spring, expected only after a surge in cases, a large rise in deaths, and further weakness in the economy. Greg Dacko at Oxford Economics writes, the economy's main growth driver, consumers, are poised to pull in their horns, underpinning an abrupt growth slowdown in the current quarter. Let's go what Goldman Sachs did. As a result of the outbreak, in just one example, they recently halved their estimate for growth in the first quarter next year from 7% down to 3.5%. Jan Hatzius told me yesterday that the first quarter risks are to the downside, okay? But beginning in the spring of next year, Goldman adds back 3 points because of the positive effects of the vaccine. I talked to health experts. They say the surge and the vaccine, they're closely related. The worse the situation before the vaccine is deployed, the less help the vaccine provides to the broader nation and the recovery. Dr. Bruce Y. Lee, he's professor of health policy and management at CUNY. He told me, if the virus goes unchecked, we'll be so deep in the pandemic that the vaccine alone will not be good enough to return us immediately to normal. The more people infected going in, the more cases Lee's models predicts even after the vaccine is out there in the broader country. Add to that a lack of additional relief for unemployed Americans and struggling businesses. And it's clear, guys, the news the next several months is going to really test the mettle of the market's optimism. Joe, I don't judge the market. I just sort of stand back and look in amazement at how it looks through what's coming the next couple months.
Shepard Smith here. Thanks for watching CNBC on YouTube.